Hello and welcome, everyone. Thank you so much for joining this Fintech Onramp. This is the first session I'm doing on this whole topic of a Fintech Onramp. And let me tell you a little bit about why I'm here and why I think this is an important conversation for us to be having in this space. So, first of all, I have grown up inside the banking industry and fintech, selling fintech of different sizes, different complexities, different price points to banks and credit unions for years at this juncture. And the past 18 months, I would say, I have gone deep into working with early stage founders, some that are bootstrapped and have been in business for quite a period of time. Others that are founder led selling motions that they're searching for their first POC. Everyone's trying to get a yes so that they can get their next round of funding. And here's the gap that I have noticed in the industry. That is, there's fintech accelerators out there, and I am a huge fan of all of the work from companies and organizations like RevTech Labs and Alloy Labs and BankTech Ventures and many of the other ones that we see out there in the industry. What I have noticed is that those providers sometimes do require a bit of proof that there's appetite for your technology, proof that you have the ability as a founder to command a conversation with the banker, that you have also just interest gathered from bankers that the solution that you're providing is one that they're willing to pay for. And quite honestly, you all, from the point that you have an idea, an inception of a new piece of technology that you'd like to carry forward into the market until the point that you might qualify for one of these accelerators, there's an uncomfortable period of time, a gap between zero to start and accelerator. And that's sort of why I wanted to have this conversation, what I'm calling the FinTech on-ramp, hopefully helping you as a fintech founder get from the point of where you are today to perhaps the opportunity to engage with these fintech accelerators and receive funding from them. So that's what I'm doing here. And quite honestly, if I'm very honest, like just very transparent, I want to be an open book. I want to be authentic for you all out there. Not everyone has the interest perhaps in working with me, or perhaps has the ability just resource wise to work with me. And I think, just this may sound very naive, but growing up in the Midwest, in the environment in which I did, growing up on a farm, always working, always seeking how to help other individuals, it's a part of my ethos. I want to be of value. I want to be of help to people all throughout their journey. So that's what I'm doing here. It may sound very Pollyanna-ish. I hope you understand that I may not be your person, but if you are an individual that is seeking some help, some guidance, some direction, and you just need a voice in the room to help you or to guide a conversation because you feel like you're going at it all alone, you're here and you want to get to the point where you have funding or POCs or your first customers, consider me in your corner and consider me here, willing to share some thoughts, some experiences, some very hard-won lessons over the course of a monthly period of time, an hour on a Friday. So if you are here for it, and if you want to up your game in selling fintech to bankers and credit union employees, I'm here for it, and I'm here to cheer you on. So again, my name is Stacy Bishop. Thanks for those of you that are joining in right now, and for those of you that are going to be watching after the fact, love to have you all as well. So, hey Marco, thanks for joining in here in the studio. We'll get to some of your particular questions or needs you might have later. But the way I thought I might go about this conversation is sharing some information that I talk about with, in some cases, some accelerators, in another case, a speech that I'm getting ready to give in the Boston area next month. So if you're a fintech founder and you need that person in your corner, here's some of the information that I provide out there to others in the space as well. So let me go ahead and present my screen, and we'll get this going. All right. Please hold. Here we go. All right. Marco, everyone else, I hope you're able to see this. If not, Marco, please don't hesitate to hit me up in the chat and let me know that you are having some challenges hearing me or seeing me, okay? All right, kind. Sorry, now you you know how to use the chat. I'm so glad you're here. All right, here we go. So I think about selling fintech in a lot of different ways, but for me, it begins with where a company is in their journey. As I've mentioned, this conversation, this fintech on ramp, is for any individual out there that is trying to establish their first POCs. They are trying to establish and get their first yeses on paid commercial agreements with bankers or credit union employees. And you can do it. Trust me, you can do this. You can get there, and you can do it in a way that's authentic to you and to your company. And in many cases, what I have found is that fintech founders today, they're developing technology to be absolutely something new and innovative and unique, something that is different than all of the other people playing in the space. Either you might be developing something, going about solving a traditional need in a new and exciting way, not like all the other guys out there, or you might be developing something so new and earth shattering that you're needing to create category and demand and train around what you're doing out there. So I'm going to spend some time talking to you about where I think you are and challenges that I commonly see with founders that I work with. Then we're going to spend the last part of our time here together chatting about any real world challenges you might have. All right, so let's go ahead and get started out there. We're going to talk about this concept of what I call a category conundrum and why you might hear me talk about that. All right, this is something I have been kind of testing out, this idea or this thought process around. I'm guessing any of you that might be watching this know what this vehicle is. You might not have seen one in person, but I guarantee you have likely seen one on a screen, either a movie screen or a TV screen. It's, of course, the DeLorean. Not many of us have ever driven one. I doubt there's any of you out there that might be watching this that have actually owned a DeLorean or own one now. And that's kind of the point. There is a point, trust me, to why I'm sharing this concept with you and this story. Because as founders, you have your work cut out for you. You first have to develop this new and exciting product, and we're told as well as founders that we also have to have our own brand, which you do, but that doesn't necessarily lead to your success, just like it didn't lead to the success of the DeLorean. So here's this guy, John DeLorean. He made himself famous by carrying on roles at GM. So he developed this entirely new car. He was so just avant-garde that he created a vehicle that didn't have a paint job, you all. This stainless steel look, these what they call these seagull doors that look like they landed back in just in 1981, but from the future. So John DeLorean had a brand. People knew him. People trusted him. He was doing something new and exciting in an industry that he'd already proven himself in. And John DeLorean and his team were also latching on to this concept of the next generation. And this is something I hear all the time that we talk about in fintech. Next generation digital banking, next generation loan origination system, next generation AI agents, next generation this, that, and the other. It's not an entirely new concept. We have seen the next generation being used throughout time, but also here in the case of the DeLorean. It was new, it was innovative, it was exciting. And in fact, what's very interesting about the DeLorean story is not only that they had a founder with a brand presence and charisma and great marketing strategies that appealed to people, They also had channel partnerships and distribution because they had dealers throughout the country that said, you know what, I want to work with you. I want to work with you and sell your vehicles, so much so that I'm going to invest in your company. Think about that for a moment. Think about the players that are distributing your car in this example, believing so much that they're willing to invest in you. And even though John DeLorean had all of this going on, he had a new and innovative product, he had his brand presence, he had great marketing, he had distribution, he still ran into a problem because over the course of time, he wasn't able to deliver on what was being promised to the market. And the price points started creeping up to other known sports car luxury brands, things like Porsches and Lamborghinis and Ferraris. And it didn't have the product capability to compete at those price points. So when you have a product that's not delivering, a price point that's out of whack, you start to get into this scenario in which you have just a situation where there's a commercial failure. And that's what happened with DeLorean. That's what happened with all of these vehicles that you're seeing. Those without paint jobs, they began to set on the lot. These vehicles did not sell, even with all that John DeLorean had going for it. So think about us now. Think about us working in the fintech space, each of us clamoring against each other, trying to get bankers and credit union employees' attention. It is tough. It is not for the faint of heart. But that's what these discussions are geared around. We're going to see how we can not be like John DeLorean. Take the lessons, take the learnings, and start figuring out how to carry our own solution forward. And we're going to do this 1 month at a time. Ooh, hopefully with better pieces and parts coming in. So here's sort of what I have worked out. This can change. This can change based on feedback from you all if you find these sessions valuable. But I want to start off with what I call a signal that you are talking about yourself in such a new and exciting way, or doing something that's so new and exciting that you've created this conundrum for yourself. So we're going to start there. That's what we're going to do today before we open it up for any conversations. Additionally, then, what I have planned for following months, something that might be of interest to you all, like how do we get in front of bankers? Lots of options, lots of bad options out there. There's also some good ones that I would recommend. Building your champion and closing the deal. If you're thinking about generating opportunities through channel partnerships, that's also something that I have some expertise in, both sides of the table there, both being a channel partner that people wanted to work with and creating channel partnerships as well. So I'll give you some tips there. Additionally, I thought about, at least for the last session that I have planned, pricing without regret. Now, even though I said the last session I have planned, I'm hoping that this is not the last session that I do. In fact, if these sessions are of value, we can create and we can add additional content, and I will do so based upon the types of questions that I get from people like you, from fintech founders that have a specific problem and need some help. I'll see what I can provide to you all to make your jobs just a little bit easier. Okay, so I have the next handful, if you will, planned out, and I'll show you an easy way to keep track of those upcoming sessions, and if you're so inclined to register for them as well. But why don't we go ahead and start at the beginning, diagnosing your signal. And here's what I have found, you all. Your uniqueness, the thing that makes you so different than the other people out there selling what you're selling, doing what you're doing, may actually make it harder to buy you, harder for you to sell yourself and your solution. And that's what I want to get into. I have seen this play out a lot over the course of time, and I've had a recent example with two extremely bright founders, approachable, they're likable and authentic. They came from academia and have developed a company. And when they were talking about their company to me, they were talking about the quantum internet. And I remember sitting here thinking, wait, there's more than one internet? And then they began to tell me why bankers are needing to care about the internet, the quantum internet, a problem it solves. They actually have a critical date coming up very, very soon around the quantum internet. And I have found that this concept was so novel to me. I didn't have a place to even properly think about it. And that's not so different than the bankers that we try to sell to or the credit union employees. If we are coming at them with something that is so different, so very, very unique, we are likely going to need to teach them how to buy us because we are harder to sell versus other people that are selling a more commoditized solution. Then this is no hate or shade towards the loan origination systems or digital banking systems. People get those. People understand the relevance of those in their tech stack. Bankers may not yet be at a point in which they understand why the quantum internet needs to be factored into their tech stack, why that's important. And that's part of our job as fintech founders and fintech sellers to help create that bridge and create that link over to them. All right. So this, unbeknownst to many, people often think that when you can't create this logical link, gosh, it's got to be the seller's problem. It's got to be the fintech founder's problem. Maybe, but I would tell you it's very often not a pitch problem. Instead, the person that you're speaking at, the person that you're trying to tell in that banker seat across from that Zoom meeting or that virtual meeting just doesn't have a place to sort you or to categorize you in their world. And if they can't do that, if they can't figure out why your solution makes an impact in their world today and aligns to a goal that they have today, they're going to park you. They are going to be very kind to you most of the time and say, this is really interesting. Yeah, we'll get back to you on if we have this issue. Instead, we want to help tell the story. We want to help them place us and our importance and ideally move our deal forward. So please know it's not just you. It's not just that you need a sharper demo or you need to ask better questions, although both of those might likely be true. But it's not just a situation that you can fix with making your deck prettier. It's something where you need to explore where that barrier is coming up, where that friction is coming up. And I think of this in terms of the category conundrum. You've heard me use this term. It is that situation in which you have developed something so cool, so innovative, so new that people give you a signal that tells you, okay, this is so new or so different that I don't know how to place this. Here are 5 signals that I have found that showcase that people just do not know how to place you or think about you. And these indications will show you that you are stuck in the category conundrum. I'm going to take you through these, and then I'll give you some ways to get yourself out of that category conundrum as well, okay? Signal number 1, bad comparisons. This is where someone says to you, okay, so you're kind of like so-and-so. And you, in your mind and in your heart, you're like, we are nothing like so-and-so. They kind of do this, we do this. But for a banker, that just lets you know that they're trying to place you in what they know. It's much, much better to say something along the lines of, oh, yeah, not exactly like them. They do a great job of X, Y, and Z. Where we have found that we either play with them or banks will make a choice for us instead of them, or whenever the banks want to accomplish A, B, and C. Are those areas or things that are of importance to you, A, B, or C? So if you find yourself being compared to unlikely solutions, You might be in that category conundrum. Signal number 2 is there is an absolute pain disconnect. This is where you have created your solution and it's so stinking obvious to you that a banker should move forward with you because they have a pain and you know they have a pain or you know there's a better way. But from the banker's point of view, they don't really think they have a pain. They're getting the job done today. And sure, it may be manual. It may not be accomplished in the best possible way or the most efficient way, but it's getting done. So if there is a disconnect between the pain that's obvious to you and a lack of urgency on the banker's part, you might just be in this category conundrum. Additionally, if your value doesn't travel, and this is where if you were trying to explain your solution, but nobody else can explain your solution because it's so new and so innovative, yeah, this is going to be an indication that you could be in that category conundrum. Or if there's high interest and no movement, people that tell you what you want to hear, like this is amazing, this is earth-shattering, I've never seen or heard about anything like this. You're getting that response, but you're not getting the next meeting scheduled or your emails responded to or your phone calls returned. That's likely an indication that you're in that category conundrum. And the last thing, you are famous. You have created a brand for yourself like John DeLorean. You are on stages. You have press releases. You are putting yourself out there on LinkedIn and people are following or liking you, but it doesn't actually equate to deals moving forward. You could just be in this category conundrum. Like, so what does that mean? What does this category conundrum mean? Well, I think of it in terms of there's a challenge, and there's a challenge that you face and that your commoditized or commodified competitors also might face. And I think about this in terms of what happens prior to the sale and what happens afterwards. Let me show you what I mean by this. First of all, how the market places you, meaning, okay, you're doing something new. You've created something super exciting, but if you have to use a lot of jargon or words like governance or digital transformation or orchestration or frameworks, you're using these throwaway, very jargony terms. And people are confused and you keep having to re-explain yourself in every conversation with the same stinking bank or credit union, it's working against you, the way in which the market is thinking about you. Versus commodified competitors that you might be compared to. They're easy. People know them. They know their name and they know what they do. You may not want to say we're like them, but the words you could be using are confusing matters and making it harder for people to buy you. I kind of referenced this or alluded to this. If there is an explanation required, meaning if you have to, on your side as this innovative leader of doing something new, if you have to go out and explain why your solution is earth-shattering over and over and constantly re-educate these same buying committee members, not new ones, these same ones over and over again, this is a challenge you are facing pre-sale when people are trying to figure out whether to buy you, versus your commodified competitors where it's minimal. The buyer's mental model. This is where people are sitting there listening to you talk at them, and they're sitting here thinking amongst their grocery list and kids' activities. They're sitting here thinking like, what is this? Who owns this? Is this something I would have to manage? Is this me and my team? Is this like who signs for this? If they are going through that internal dialogue, you're making it harder for them to buy you versus other people that are like, oh yeah, I know what this is. I know exactly the way that we would move that internally as a buying decision within our organization. Time to comprehension, like with your commodified competitors, it is fast. People know easily what they're doing versus you. If it's slower and you're always needing to re-explain and re-educate, this is the converse scenario. And the sales cycle's friction, where if it's low for your commodified competitors because they're known and they have these things working against them, it's absolutely more difficult or a higher friction point for you because of these pieces shown on the left-hand side. So that's the bad news. The bad news is you're so neat and so innovative that you have things working against you pre-sale, pre-agreement. The good news is after you get that agreement, you have so much working in your favor that enables you then to parlay that into future opportunities, use cases, proof points, and premium pricing. And that's what we're going to talk about next. When you start beginning to think about your competitive differentiation, super high for you versus the other people that you're competing against, because you built a moat around yourself with all of the competitive elements that the other guys are just not doing, not taking advantage of. Pricing power, as I alluded to, you have it. You are able to drive a premium price point versus the others. You can influence the market more so by putting out thought leadership and vocal authority. And guess what? People will pay attention. People will want to listen to what you have to say because you are innovative and you are doing things in a new and exciting way. You'll be able to drive more customer loyalty as well as own the category that you may have had to claw your way through to create, so that now you're dominating it, versus the other people out there are just pricing their way to the bottom as they get each deal. Okay, so it's not all lost. Yes, these things at the top of the screen are real. They are friction points. And now we're going to start talking about how we finagle our way through a sales cycle to where we can get our way out of the category conundrum, and then we'll open it up for questions, okay? So listen, if you're doing something new, if you're doing something different than the other 13,100 plus fintechs here in the States, you're likely going to have to work your way from this situation, likely starting at parked, where there's no urgency or understanding around your solution, to either provide better clarity and get on their list, working your way up to signed, or creating and aligning with a priority that the bank has in order to get yourself signed. This latter example is always going to be the most predictable and the best way forward, okay? But here's what we need to understand. We talked about there's 5 signals to let you know you're in that category conundrum. You first of all have to figure out which of those signals you might be receiving and start paying attention to that so you can work your way out of it. We're going to talk about how we name the quadrant, and we don't skip over the diagnosis that comes up with each sales cycle. So it begins with claiming the category. And how do you do that? Well, there's 5 major moves. The first one is diagnosing the signal. Which of those earlier 5 situations are you facing? Bad comparisons, pain but no urgency, those that we talked about earlier. You've got to teach people how in the world to not expect bankers or credit union employees to figure this out themselves. They've got institutions to run. They've got customers and clients and members to serve. So don't put that on them if you want to move your deal forward. You have to teach them how to buy you and what good looks like in doing so. You got to meet them where they are, because if you try to talk to them right off the bat about, and I'll go back to that example of the quantum internet, trying to take them from point A to directly to the quantum internet, you're likely not going to have the feedback or the desired results with the sales cycle progression that you might otherwise. You got to give them an anchor to their current world and their current priorities, of which we're going to talk about. And then we'll get into creating some champions in future sessions. But in this one, listen, these were the 5 signals we talked about earlier. Now, as we go through these bad comparisons, you'll understand that the best way, if you are getting compared to someone that's nothing like you, that you can get yourself out of that situation is to give people an anchor to current reality. So we're going to talk about that. That's tied to what I think of as move forward. Pain where it's not landing, pain and urgency are misaligned. You got to meet them where they're at on what I call the aware and unaware spectrum. If you have people like your champion that they have no idea how to talk about you internally, that's a problem. We need to give them simpler language and language that they can easily plug into future conversations in the bank and credit union. If there's interest, like, oh my gosh, this is so neat, never thought about this before, but zero movement, you're going to want to focus on step 5, where you create that internal champion. And then lastly, if you are being praised on all the stages, you are a darling at the events that we see in the industry, but no deals moving forward, you're going to have to run these 1 through 5, starting at the top, and we're going to get into each of these now. So let's begin with teaching them how to buy you. With this scenario, like, you can explain the product, and that's, folks, that's our inclination. We want to talk about the product. And if we see a glassy-eyed look or we're not hearing any feedback, it is human nature to continue to talk at people, to try to explain the problem better, or to use different words or different examples. And all you're doing is, with all this talking at them, is creating more confused buyers. And what we really want to do is instead take them along on a journey and teach them how to buy you. Every stage of a sales conversation should likely have some graphic that says what your process looks like. And please don't think of this in terms of a sales process. Think in terms of this as a buying journey. So when you are speaking to bankers or credit union employees, we are on this step, the introductory call and the discovery call. The next step is where we would commonly show you a very personalized demonstration of our system, and we do that with a wider audience. Here's where we invite the risk team, here's where we invite IT and others, because we know they're going to need to weigh in on the decision anyway. And it's best for all of us if we know that if there's any hard stops or deal breakers early on in the conversation. So you'll want to let them know what buying your solution looks like, what they can expect. So often we as sellers of fintech, whether you are a founder or an early stage seller, we wait for someone at the end of the discussion to say, okay, well, let us circle up internally and we'll get back to you. Please don't ever allow that to happen. Instead, a much more productive conversation sounds like, all right, well, here from my seat, it seems like, we can provide a great deal of value. I'm interested to see if you see it the same way, or am I off base? Wait for them to respond, listen with interest, and if the interest is positive, that they want to move forward, great. What we commonly do with organizations like yours is try to schedule the next demonstration then within the next 2 to 3 weeks. We know it can be tough to coordinate calendars, especially in the summer, but here's what you can expect us to share. We heard X, Y, and Z in our call today. I'll present to you X, Y, and Z in the demonstration because we know that those are priorities for you. And if there's interest in seeing some other aspects of our system, we can cover those at the end, time allowing. But we'll have that conversation, and we'd love to pull in these individuals. And please do your homework, know the roles that you want, know the people that are in those roles, and make those suggestions. You want to show up as the professional. You're the person that's selling your solution, and you're an expert at it. Even if this is day 2 on the job, you are more of an expert at selling your solution than the banker or credit union employee is at buying it. This is a teeny tiny part of their very important jobs out there. So make it easy for them. Have a graphic, suggest to them next steps, get it calendared while you're on the call with them, okay? So, and you want to create those informed buyers. You also want to make it easy for them to understand what you do, either with an analogy or a sentence, a 4-sentence test, like what you do, what you solve, the changes that bankers can expect when they use your solution, and how you normally work with banks, that process that I've mentioned there at the end, right? So lots of stuff I'm throwing at you here. The ultimate goal is for you to understand how bankers should work with you, like if you're doing your job well, how they should work with you, and how you can very easily and in a very brief, very clear and concise fashion tell people what you do so they can share that within their organization. And folks, you have to meet them where they are. Do not tell them that you are developing something so earth-shattering that they have no point of reference and expect them to buy because it's new and because it solves some need that they're getting done manually today. All right. You've got to understand who you're speaking with and where they are in this conversation. And this is where you need to know that not every conversation with every banker sounds the same. You have to be very good at sizing up. Are these people unaware that this problem exists because they've been so focused on doing a great job with new product rollout and customer and member fulfillment that they just haven't encountered this? Are they somewhat aware, or are they ready to buy and highly educated? If they are unaware, you've got to start by talking to them about the pain of the problem, the reason this problem exists, what you see, why you started your company, and introduce them to the solution at the end, not at the beginning. If they are aware, you don't need to take them through that same diatribe. This is where you can start with your differentiation. Never casting dispersions on your competitors, even if you are so drastically different and a replacement product. Instead, you talk about differentiation or what you're bringing to the table to help them get from their current to their future state. All right, that's your goal. And to do this, you really need to think about giving them an anchor point, especially if people are unaware. And this looks like leading with something they already know, anchoring to something to them, bridging from that anchor point to the future, to the destination that they have with your product. And for me, this looks like this. I want to give you some examples, 5 different anchors that you can use if you are speaking to an unaware buyer. Again, unaware does not mean too conservative. It doesn't mean that they are uneducated or ignorant. It just means they haven't come across the need for your solution yet, or the conversation. All right. So let's take any bad descriptors off the table. Bankers juggle a lot today. It's our job to help them juggle more easily through this buying process. So start with, in many cases, the pain anchor. This is where a banker has felt something, they've just never put a name to it. So this is where you can say, in most organizations, we find that they're losing over 40% of deposits to digital first competitors like Robinhood, Acorn, Stash. This money is silently leaking out of the bank. Do your homework, create some statistic, and then you can ask them, I wonder, have you done any research amongst your own deposit transaction files to see if your results are similar? And you can begin to have an educated conversation around this whole concept of deposits fleeing the bank. Instead of a pain anchor, if your solution does something to improve a task or an element of a workflow, it can sound like, well, we find that many individuals that are in your seat find that their team members are spending X amount of hours each week doing this. Reconciling something by hand, creating reports, sending out notices to customers, something like that. So something that you can create and tie a task to, okay? Technology anchor. This is one that's a bit nuanced, but a lot of times I can tell you in my past selling for a core company, there are plenty of times in which we would recommend an aspect of the solution of the system to do something that it wasn't quite exactly created to do. So that's why when you talk to sometimes bankers and they say, "Oh yeah, we use our core system for that," you can say, "Oh, that's interesting. I'd love to learn a little more about that." We often find that bankers are trying to use their core system to do that, even though it wasn't exactly designed for it. What we have found is that people encounter challenges when they're doing that with doing this, processing transactions, acquiring or onboarding new types of depositors in that fashion, or any number of other tools that make using a technology that it wasn't designed to do more difficult or seem less attractive. I hope that one makes sense for you all. All right, process anchor. This is where someone that just they're getting the job done with spreadsheets or manual movement of transactions in paper. This is where you can say, here's how we understand the loan review process to move through your organization. Are we off base there, or are there other elements that we haven't considered? And then lastly, the toughest one to pull off, but one of the most effective, if you could do it well, is an emotional anchor. And an emotional anchor is just where, oh my gosh, this can be done today with something like AI, where man, every banker I talk to tells me they feel like they're falling behind with blank, whatever blank is. And you can showcase how you can help keep them up to date. These don't always apply for every solution. So take a look at your own fintech product and figure out which one would be the most compelling, the most hard-hitting, and the most practical use case when you're speaking with bankers. And if you are in a scenario in which your deal is stalled, pick one of those anchors that you can use to help get your deal unstalled, unstuck, moving forward or progressing. So this is going to require a little bit of introspection on your part if you are having conversations with bankers. Who is the banker? Are they aware or unaware? Which of those anchors fits? And then write out those sentences with a little glimpse at the end as far as how people work with you. That's 4-sentence test. Now, you guys, we're nearing the end of this more teaching-y, frameworky set a part of the session. But I think in terms of doing something so new and exciting by an adoption ladder type of process. And I've alluded to this already, but it is incumbent upon us as sellers of fintech to understand that people start at different levels, and not only of the unaware, aware, educated, ready to buy spectrum, but on their way to adopting technology. So if you are trying to speak to someone that has never heard about anything like your solution in a meeting, and you're trying to take them from educated to buying in one meeting, you're going to fail every time. Instead, you need to empower them over the course of several conversations. It doesn't have to be 7 conversations. You can do multiple rungs inside one meeting, but you need to take them through the process where they are thinking like, I don't even know what this is, to, this, I can see where this fits, or this reminds me of something, to I understand the problem that this solves. That's a great indication right there. When you get to that stage of understanding the problem, then you need to start bridging over to their unique world. Like this particular banker, this business unit, their world, and start aligning to their priorities. Start helping them understand, or understand for yourself, who owns the problem and the process, making sure that the champion can explain this and carry this forward, to helping them get ready to move. And this is where I mean, like, listen, there are very few fintech solutions I have ever heard of over the course of my career that go from rung 1 to rung 7 in one meeting, unaware to ready to buy. Even if there's that one champion that goes from unaware to ready to buy, the overall organization likely is going to lag many, many rungs or steps behind. So just know that, understand that, and be ready to equip these people using some of the tips that you're seeing over here on the right-hand side for each of these different rungs of the ladder. We're going to talk in future sessions about building out a category champion. But one thing you have to understand in your champion is ideally be great if they also own the problem. If they own the problem, if they were a decision maker and they had budget. We rarely get that trifecta in banking. So often we start with somebody that's an enthusiast and we have to move one way or another, either up through budget, decision maker, problem owner gets looped in, or vice versa. We ultimately need to figure out who owns the problem, who makes the decision. Those are going to be two people we need to know. Now, that's a very small sampling of what I call a buying committee, but those are going to be some of the key buying committee members that if you're new to selling fintech, like, let's not overcomplicate it too much for your first intro into selling to banks and credit unions. Instead, just make sure that it's something helpful. Bye, Marco. All right, I'm going to go ahead and stop sharing at this point. Marco, thank you so much for conversation here today. If there's any other types of questions or comments that the group might have, please don't hesitate to stop me and let me know at this point. I absolutely want to make sure that we get your questions answered. And let me see if I can find some. I'll stop sharing here for a second, you all. Get over here. Perfect. All right, so Daniel. Okay, Daniel has a question. How should a sales team pitch an agentic AI solution they have built for the bank? Oh man, I will tell you, Daniel, this one is going to be more and more challenging because of the noise around agentic AI solutions. First of all, understand, like, put yourself in the banker's seat for just a second and take a glimpse around the fintech world and start looking at how many people are using the terms agentic and AI. Because these two terms are being used in everything from like onboarding solutions to internal workflow solutions. Reg tech solutions are huge, talking about them right now. So understand all of the different touch points that a person or a banker can hear agentic AI. And I'd like you to start there, Daniel, or at least recommend you start there, because your goal in knowing that information is to figure out how to best position your solution, knowing that there's a lot of different noise out there. And you can even begin a conversation with the banker by saying, I am certain that you hear about an agentic AI solution 5 times a day, maybe 10 times a day. Here's our approach and why we're different and the way we're using agentic AI. Now, Daniel, I know absolutely nothing about your software at this point, or about your solution. There's absolutely work we could do to kind of dig into what segment you play in. But without knowing anything about you all, I would say start by knowing what a banker is facing, and start by knowing that agentic AI is not going to be the inroad into a banker. They are just not going to understand that, because everyone is using those words, and everyone is using those words across multiple segments and multiple areas of the bank. So know how you're different, know what you bring to the table that is going to be different than everyone else, and then start crafting a story. And I'll just suggest that at that point, you go back to that 4-sentence test I mentioned earlier. Let me pull those in as well right here. and place them out in the, I'll create a little banner for everyone to see this. All right. And it's this banner right here, these questions. So when you're trying to figure out, Daniel and anyone else, like how to differentiate your own agentic AI, again, start with all of the different other people that are talking about agentic AI, and then start framing it in terms of what you do. I don't know if I were in your seat that I would lead with agentic AI. I would lead more with like what we do, that what we solve for bankers, why bankers would work with us, how we work with bankers. So it's the, here's what we do. I wouldn't mention agentic AI unless that is the primary tenant or selling point. Even then, I think I would say we help, we evaluate the processes that banks are doing manually and help you automate those, or help you create a system that you never have to think about it again. And if asked, of course, we use agentic AI to do this. More importantly, though, what we do is help you get from future or current state to future state, so that you are using these tools and growing your team in the right ways. Those ways in which they get to more authentically interact with the customers or members that they serve. Now, banks work with us by doing this, that, and the other. So I hope that makes sense, Daniel. Please reach out to me on LinkedIn if it's something you want to dig deeper into. But agentic AI will not be a differentiator for you today. So figure out a different way to talk about what you do that's different. Okay, I hope that was helpful. All right, let's see what else we've got going on out here. All right, Daniel, we have another one from you. So we're also deploying newsletters to banks. Okay, how do we strategize it such it gets the attention of bankers? I'm gonna have to go look you up, Daniel, to know a little bit more about your company and what you all are doing. Some great ideas or thoughts, newsletter-wise, are inviting other people to write on your newsletters, or working with individuals that have an audience that you can borrow and have them link out to your newsletter or promote your newsletter. You might start looking for people that talk to the same audience as you, bankers, perhaps credit union employees, but they don't compete. And perhaps you do a shared type of webinar. And a call to action in that webinar is, if you like what you've heard here, here's a link to our newsletter. You can find it here or here, and sign up for it, and we'll be sure to continue to share this type of feedback. So I think it's likely time for you to at least entertain engaging with people who you can borrow some brand coverage on. I hope that makes sense, Daniel. Let me know if it doesn't. And then I think lastly here, Daniel, are there any books you'd recommend for sales teams selling to banks? Oh my goodness, so many, so many. One of my all-time favorites is one that is called The Challenger Sale. And it has, I wish I had it handy here. It's probably in the back, but it is about how you demonstrate and frame up a conversation with bankers. Hear me out on this, but please, I beg of you, please, if you are selling to bankers or credit union employees, do not begin a conversation by talking about you or your company, or splashing up logos, or talking about investors. They don't care, nor should they. Those are things that we do to build armor and credential ourselves and make ourselves feel better about coming into this conversation in a very vulnerable fashion. Instead, Daniel, you take a look at that Challenger Sale. It's one of the first ones I recommend, and that one's just going to help you come at it by teaching them about a problem that you solve. And in many cases, they may not have even known about the problem. It's not easy to do those decks well or effectively, but it looks so different. It flips the script by talking about the bank or the credit union, their problem, solutions to their problem, solutions that you and your product are uniquely equipped to sell, then moving into your product and how they engage with you. So please take a look at the challenger sales methodology. One that I keep coming back to with the clients that I work with is this one here called Brief and Brilliant by Nate and Nasrallah. He does a great job of just helping simplify messaging and giving some frameworks around how to talk about your company, how to present your company to a bank, in our case, a bank or credit union. Right now, I'm reading the Founder brand. I don't have it handy right now, but it's another one that's been a great read thus far. And I'll do some digging as well, Daniel, and see for the next session that I'll do in July, see what other kind of books I might recommend. But start with those three: the Challenger Sale, Brief and Brilliant, and the Founder brand would be some good ones. And I'll come up with some others for you. I've got a litany of them. I'm a constant reader and just constantly trying to up my skills, my games for the clients that I work with. Hope that was helpful. Hey, Ivan, let's see what you've got. Hi, Ivan, by the way, long time. What's your opinion on referencing competitors to frame our solution in a way that feels more familiar to the bank? Of course, we would then build our own storytelling and differentiation, but starting from a known reference point could make the concept easier for them to understand. Absolutely. If that is the only anchor point, Ivan, is a known competitor, there's no problem referencing a known competitor as long as you don't disparage them. And just show up as a professional. Don't even make any offhanded quips like, yeah, but what we do better, or where we've really found that they've fallen through the gaps. Don't do things like that. It can sound something more like, you may have already heard of a solution like competitor X. They do a great job of solving these solutions. We've taken a bit of a different approach in our thought process around it based upon bankers that were involved in our early stage beta testing and our product development components. And the bankers that we've been speaking to have told us that they're super interested in X, Y, and Z. So you can make it sound like giving them an anchor, telling them that anchor is valuable, and then telling them why you have chosen to approach the market slightly differently, or perhaps even drastically differently. But just do it in such a way, please, that doesn't cast any dispersions or undermine or undercut the competitors out there. I hope that makes sense. All right, even better, Ivan, if you can equate your solution to an entirely different industry segment, like the hotel industry, or I don't know, something absolutely different that people will automatically know of, that doesn't even require you to mention a named competitor. Trust me, the bankers are going to come up with that named competitor anyway. They will say, oh, so you're kind of like fill in the blank here. And that's where you can say, you know, they do a great job at this. We're different in that we've approached it with our feedback from bankers and credit union employees and people in the market by doing this approach. I'm curious, have you found that the same thing applies to you, the X, Y, and Z that we have been solving for? So I would first try to look at an entirely different industry segment. If you're striking out there, compared to the named competitor in a very professional and very delightful way, if you will. All right, Daniel here. So it's a social graphing AI we built to help customers connect more to brand, but we have repositioned it completely to help banks more to their customers by helping resegment their customers. Also, we have a loyalty module integrated into the product to recommend promos their customers to help with customer retention. Okay, I would absolutely not talk about agentic AI then in your case. I would lead with the problem that you're seeing, what you do and what you can solve, why you even went about trying to reposition the social graphing tool, that AI, to this problem and what unique things you found and how we're moving things forward. And if asked, people will ask, you can say, yeah, we're using agentic AI. Honestly, these days, it would actually, I'd be shocked if a company wasn't using agentic AI. But that's not the only, that's a small piece of the solution that we actually provide. So it sounds like you're doing some cool things out there in a very unique way. Have agentic AI in your back pocket. Please don't lead with it. Otherwise, you will be lost in the noise of everything else these bankers are hearing, Daniel. Okay. Helping banks connect more to their customers. Got it. Got it. That was a slight correction. Okay. Let's see, from LinkedIn, I see a lot of validation of my product happening on LinkedIn discussions. How do I leverage those LinkedIn convos as validation? Okay, are these, I'm going to ask, are these DMs with you or these group discussions? And whatever the case may be, you can highlight those. You can even, things that I've seen done are like, you can always just say, I had a conversation or I happened to be out in this group and saw this question pop up. I responded to that group. Here's the link right here if you want to go and read this for yourself. But in a nutshell, this is what's important. And this is why I think the conversation is meaningful right now. So I don't think I would go for a pitch. And I know you didn't say pitch here with your suggestion. What you're doing is you're trying to claim thought leadership and vocal authority around a concept that validates your product. So that might seem nuanced, but let's start about a tactic. If somebody reaches out to you with a DM, you can take a screenshot of that DM, redact their name and any company information, and you can say, I've received this DM. I think it's so insightful, and here's why. It points to a problem that this institution is experiencing and also many others that we've been speaking to. Here's how I go about thinking about this problem. Try not to pitch, resist the urge to pitch if you can, and it's tough, but resist the urge to pitch and showcase yourself as that thought and vocal leader first. As I mentioned, if it is a group chat, answer in the group chat. Weigh in without pitching yourself. Weigh in with a valid type of feedback or showcasing authority or unique thought leadership out there. Create a post around it, linking out to that group, promoting the group, promoting somebody for asking a great and insightful question that you're thinking about every day as well. And then you can give them a slight call to action that says, don't hesitate to reach out to me if you want to know more about how I think about this and solve for this. So, but don't pitch them. I hope that makes sense. All right, and then Daniel sent a LinkedIn connection. Absolutely, I will absolutely connect with you on LinkedIn. And that goes for anyone else out here that's joined today. Thank you all so much for spending a bit of your Friday with me. I hope this has been very helpful to you, and I hope that we are not strangers. I hope we connect again. I'll just share over here that the last thing that I'll mention is that this is something, as I referenced, that I'll do kind of periodically. So if you would like to sign up for this or just to be aware of when I do these sessions, I'll make sure to put them out as LinkedIn events as well. But you can also, I'll share this little Luma piece just in case you're curious. You can go out to luma.com /selling fintech if you'd like additional details on that. And I'll place that out here in the chat. And I'll make sure that this is also placed on LinkedIn, okay? Okay, oh, and that LinkedIn user, okay, very good. I'm glad you've been doing that and getting your profile reviewed. That's where it begins. Make sure to reach out to those people viewing your profile and just say thank you again for the great conversation, or look forward to cheering you on, providing some value to you out here on LinkedIn. Thought I would reach out to connect. Remember, we're working with people here, people that have their own hopes and dreams and priorities. So treat them like a person and showcase that you're interested in helping them as a person solve a work problem that they have over the course of your relationship. Don't start there. build that relationship, and you will get there. Trust me on that. All right, you all. Thank you so, so much. I appreciate everyone joining today. I look forward to the next session, and I'll be taking a look at what you guys are doing out there on LinkedIn and cheering you on, okay? Thanks so much. Bye, everyone.